So good morning, everybody. Good afternoon, good evening, wherever you're at in the world. Thank you for watching. Thank you for coming back if you're a subscriber. So today is one of my investing videos. I do these. I try and do one a week, but lately I haven't been doing it. So this is a new thing that's going to be out if it's not been out already, and it can be scary because it's kind of new. But these are the new things that are coming along, which are called Robo advisor firms. So beginning and small investors can get top-notch portfolio advice. So we're going to talk about some of the risk in these and some of the pros and cons of these robo firms. And these are actually computer programs that manage and assemble your portfolios, and based upon your risk tolerance and your needs, what age you are, and they most of the time they will outshine human beings because they're not biased. So that's the main thing. The robo advisors are also supposed to follow SEC, Security and Exchange Commission rules and acts. But basically they act in their client's best interest. In reality, computer programs are only as trustworthy and capable as the humans who program them. So, all right, let's talk about this for a minute. Let me pause this 1 second. All right, so the costs. Okay, so roboadvisorspro.com, which these people are not paying me, warns that many investors don't realize they're typically charged at least two kinds of fees. You have an overall management fee, probably like a regular firm, and then you pay an annual expense, which is a percentage of the assets for each mutual fund or exchange traded fund in your portfolio. The management fees are for 0 to 0.85% of assets, and a few firms charge a monthly subscription fee from $3 to $9, which for small investors can amount to a high percentage of their portfolio, but offer a real bargain for larger portfolios. So another potential conflict, if the fee seems unusually low, there's got to be a catch, right? So some firms are willing to lose money on the free management services, using them as loss leaders to attract new clients. So for example, by putting your money into their own higher fee funds, pressuring you to use other services like their checking accounts, their loans, they're allocating some of their investment or low-paying cash accounts so they can invest the money at higher rates and keep the difference. Portfolio particulars. All robo firms require you to fill out a questionnaire so they can get your goals, your risk tolerance to generate a portfolio. If a firm won't provide much information on specific funds you'll invest in until you commit your money, it should be a red flag. So that should be a red flag right there if you're going into robo firms. If they're not going to give you a lot of information on it and they want you to fork out a lot of money, that should be a flag. That should be a flag in anything, really, including crypto. All right, so we're going to look at some of the needs of some of the companies here. Some companies from Condor Capital Wealth Management's third quarter Robo report. There's actually Robo reports out. So you might want to read up on these things so that before you start investing in any firm, you can make sure that it's pretty good. Condor's Investment Research, which is Condor Capital Wealth Management's third quarter Robo report. So look that up again. Portfolios cited here have stock allocations from 52% to 67%. All right, I'm going to give you a list of some of the robo companies that are out there, and you can research them on your own. All right, so some of the robo companies that are out there, one is called Acorns, ACORNS. And this robo is advised by some mighty financial oaks, including Nobilis, Harry Markowitz, and Richard Thaler. Acorns is best known for its debit card, which rounds up clients' purchases and sweep the change into a robo-created portfolio of low-cost ETFs. Acorns have no minimum investment requirement. It charges $3 a month for a one-person account, $5 a month for a family account, and it can create additional investment accounts for kids. So funds in Acorns portfolio have an average expense ratio of 0.4%, and these are all based upon the Robo report. Another Robo company is Betterment Digital. Betterment, Betterment Digital. This is one of the first Robo advisors, and it requires $10 for a minimum investment. Fees for the Robo account for investors with less than $20,000 were converted to a subscription model that seemed a little steep for small investors. $4 a month, that's $48 a year, equates to about 1% of a $5,000 portfolio. Those who have at least $100,000 can upgrade to a premium tier. And the underlying funds in Betterment's basic portfolio have an average expense ratio of 0.9. Now, Betterment also provides extra services to those with big tax bills and people in retirement. It automatically harvests tax losses, losing an investment to offset the gains or income at tax time. So if you have big tax issues and big tax returns, this might be the one to go for you. It turns their investments into steady income in tax-smart ways. So if it's taxes are your issue, Betterment Digital might be the way to go. Okay, so the next one we're going to talk about is E-Trade Core Portfolios. This is another Robo company. It's E and then it's got like a little star and then trade. And this was purchased by Morgan Stanley in 2020, and it is a robo service known as an Access Investing E-Trade. It sets a $500 minimum investment and offers clients clear 3 choices. You get a standard index portfolio that emphasizes environmental, social, and governance values. And it also could give you a smart beta portfolio that mixes in funds that invest in stocks that E-Trade managers believe to be undervalued. It charges a management fee of 0.3%, and the ETFs have an average expense ratio of 0.05%. So the merge program currently offers few extras than some of the other ones that I've already talked about. E-Trade customers can call and talk to a human about their investments, but there's no general opportunity to consult with consumer financial planners. So the E-portfolio tracked by the Robo report earned a 2.8% over the last 5 years compared to the other ones. Okay, we're going to talk about Ellevest Digital Investing. Okay, this Robo service focuses on women, and its retirement portfolios are designed to take into account their average lower earnings and longer lifespans. And this was founded by a Wall Street executive, Sally Krawcheck, and there's no minimum investment. Its entry level plus membership fee is $5 a month. There's a premium executive $9 a month service, and all members get access to webinars, discounts on coaching services from certified financial planners. The members can put their savings into a basic or impact portfolio, and the latter puts about half their money into funds that focus on companies for which women play leadership roles, that promote community development, serve substantial goals, and the portfolio on Robo report tracks about a return analyzed 3% over the last 5 years. Okay, so the next one is Fidelity Go, which beginners won't get a better price anywhere. You only need $10 to get started. You can invest with less than 25,000 for this service gratuitous. There's no advisory fee. And invest in Fidelity Go. Invest your money in flex index funds, which don't subtract expenses from their returns. So if you're a successful saver and investor, your free lunch ends once your account hits 25,000. Then you'll be charged an annual fee of 0.35% of your balance. So I don't know why you would go over 25,000 in this company. So maybe you could just do like we try to teach on here, and put your money in different places. Put up to 25 over here and then move the rest of it in different places. And some of these other robo services. Because you don't want to pay $87.50 a year on 25,000 and you gain access to unlimited financial coaching, which sounds good if you need unlimited coaching. For those lower costs, you don't need a lot of choices. You don't get a lot of choices, just the flex index funds. So you can tweak your allocations, but there's no other personalizations such as thematic investments. So Robo Report puts it well above the average on this list. So some of the other two that we have on this list are Merrill Guided Investing. All right, so the other one is Merrill Guided Investing. Merrill is the least robotic of the robo-advisors. New clients who must invest at least $1,000 get a computer-recommended investment strategy based on their goals and risk tolerance. But instead of filling stock and bond allocations, which broad index funds do, Merrill's chief investment officer favors more targeted ETFs. So Merrill charges a 0.45% on the top of the expense ratio. And for those who want access to a financial advisor, Merrill charges 0.85% for its hybrid service. So Bank of America customers and its preferred rewards programs can get discounts. And for the Robo Report, it got a 3.1 average for the core portfolios on the list. Another one here on the list is Schwab Intelligent Portfolios. Schwab paid $187 million to settle SEC commission charges that misled investors about the way it makes money from the robo service. So instead of charging a management fee, it requires investors to put a portion of their money in cash accounts so that it can invest the money in higher paying investments and keep the difference. So managing director for the digital advise and planning at Charles Schwab says the company is clear with its clients about trade-offs between the cash requirement and paying an advisory fee. Cash can be a ballast for diversified portfolios and got below the 16.8 average loss for the core portfolios for the robo-advisors that we looked at. Based on a client's risk tolerance, goals, and time horizon, cash was certainly a plus in 2022. Cash is a drag on long-term returns. Schwab's 5-year 2.3 annualized return, tracked by Robo Report, put it in last place. So it's in last place. You can look at this chart that I have on here and you can see what each of these are doing. So the next one we could talk about here. Oh, let's finish with Schwab. Okay, Schwab has a menu of more than 50 ETFs, including its standard index funds. The firm's basic tier starts with $5,000. Once you reach 25, you can opt for premium service, which charges a one-time $300 fee, and then $30 a month for unlimited financial planners. All right, SoFi Automated Investing. SoFi offers free services to robo-advisory clients. You get extras such as financial career coaching. The firm gives investors 5 different mixes of stock and bond ETFs to choose from. It has a annualized return of 3.5 over the last 5 years, and it has lost money for the last several years. So they may at some point hike fees or ramp up marketing to push customers towards more profitable services such as loans. All right, Vanguard Digital Advisory. Its basic robo service is less than 3 years old. It has a low management fee of 0.15%. And there are 4 Vanguard ETFs that give a broad exposure to stock and bonds. Vanguard's basic tier has some attractive extras, such as the ability to create multiple savings goals within one account. It has a retiree income withdrawal in 2023, and it provides more investing options, including municipal bond funds. Because Vanguard's basic robo portfolio, it only has 2 years of return data, so it hasn't been on the list for as long as everyone else. It's only been on there for a couple of years as opposed to 5 years, because it's a pretty new one. So Wealthfront is one of the last pure robo services. Wealthfront boosts a low minimum investment of $500, low management fees of 0.25. It has 12 human customer service representatives. It does not offer access to human advisors because from one day, for those who want more than a basic index offering, Wealthfront allows investors to personalize their portfolio with hundreds of ETF choices. And this service is automatically harvest tax losses daily, which is good. So its original core portfolio notched a 4.4 annualized return over the last 5 years. And the newer portfolios have less energy exposure and have posted lower returns. All right, so let's talk about a couple other things to how to find the robo that fits your needs. Okay, so how do you find the robo that fits your needs, the robo services, the investment companies? So how much human involvement do you want in your investment? Do you need to talk to people? If not, consider Wealthfront. If you like unlimited access to your human, you need to consider SoFi because this has a lot of interaction. We talked about the different ones. You could also go to Robo Reports, as I stated before, and you could check out some things if this is something you want to consider. How complicated are your finances? Okay. If they're simple, then you consider Betterment, Fidelity, Vanguard, or Wealthfront. If they're more complicated, they're pretty complex. You might want to go to Schwab, Vanguard, Premium, Betterment, Premium. Did I already say that? If they're like in the middle, then Betterment or Wealthfront. All right, so what are your investment journey? These are the questions you need to ask that's important to you. You're just starting off. You're like in your 20s. You have a little bit of money, but you want to retire in your 40s. Consider SoFi or Fidelity. You don't need a whole lot of money to invest. If you're like in your middle age, you need to up it a little bit. You might want to consider the basic tiers of most providers. You're getting ready to retire in the next 10 years and you need to really up it. Go with Schwab, Merrill Guided Investment. How important is values-based investing to you? I focus on returns, period. Then you might want to go with Fidelity, SoFi, Merrill Guided. Or do you want your investments to address environmental, social, government concerns? Then, consider Elvest, Digital, Vanguard, Wealthfront, or ESG. I think Elvest was the one that was all women. So if that's important to you, then go with that. So you need to find out. These are the questions that you need to ask yourself before you go into robos. If you don't care about having a human being, then this will be a good fit for you. I thank everybody. Hopefully you learned something new and put your thinking cap on. And I'll see you all on the next video. Thank you. Please subscribe and like.